So people are asking me, now that the presidential election has been decided, what should I do with my portfolio? I tell them the same thing I said in my video from last week. Link in the pinned comments below. Absolutely nothing. My wife and I are heading to Florida this morning to visit my father-in-law, who will be 102 in March. So I don't have a lot of time to do this video, and I may not get to one next Friday. So I'm not going to waste your time. Let's jump right into the analysis of the markets to see what's happened since voting day last Tuesday on November 5th. I think that tells the entire story. So if we look at how equities performed over the last week, you can see we had one heck of a good week. ARK Invest is way above all the others. This is the highest risk basket, followed by small caps, followed by the NASDAQ 100, and followed by the Dow and the S&P 500. This is a very, very healthy appetite for risk. And what if we look back over the past month? Well, you can see up until the election, we were just kind of wallowing, and then things really took off. And then I'm just going to skip ahead to 1 year. And if you look at my last video and some of my previous videos, I talked about the fact that ARK was in last place, but that when it launched higher, it would beat all of these. And you can see that's starting to happen right now. What about the current bottom dynamics? Well, you can see they've been all over the place with the uncertainty, but now we have a definitive launch higher in the price of the S&P 500, and the confidence level is moving higher as well. In fact, it looks like it's up here kind of in the mid-80s, approaching 90. High confidence, price is moving higher. That's a good recipe. That's what you want to see. And what about risk versus opportunity? Well, you can see that because of the uncertainty of the election, the risk acceleration was way up here, way higher than I would like to see it. But I took my own advice and didn't change anything before the election. And you can see that now risk acceleration is dropping. What's happening with opportunity acceleration? It is moving higher, but sort of tepidly. And then you can see that opportunity, which is really laggy, has been on an upward swing since way back here. So this looks great. And then risk, which is also very laggy, is now moving lower. This looks very, very healthy. And how do things look in equity versus safety? Well, quite a change from last week. Let's jump right into the overlays. So you can see what's happened here. Small caps shot right up to first place. This is risk on. NASDAQ 100, large cap tech, moved up a notch to second place. Cash got pushed down by both of these moving up. Gold got pushed down, S&P 500 moved up, and even the Dow, which are safer equities, and there was a good reason they were down here. Remember last week I said the markets were selling safer stocks and putting the money in cash because they intended to put them in riskier stocks. Well, guess what happened? That's exactly what happened. And what if we look at safe haven assets? Well, you can see that gold has just plummeted now that we're past the uncertainty of the election. Cash has moved down, as I said. Short duration treasuries got pushed down by equities moving up. And you can see that intermediate treasuries stayed flat and TLT got pushed down by the Dow moving up a notch. How does all of this show up in the buying and selling pressure? Well, this is a couple of weeks ago. I said we've got some real major divergences here. We have prices moving higher, but the buying pressure moving lower while the selling pressure was moving higher. This can't continue. Well, and in fact, it didn't continue. You can see that the Dow peaked out here right after I published that video and really started to plummet. Now, where were we? I think this was a week ago. I said we have another divergence. We have falling Dow, falling selling pressure, increasing buying pressure. So this looked like things might turn around and move higher. Well, where are we now? Voila. You can see exactly what happened. You can see back here, prices were falling. They were falling, but the buying pressure started moving higher as the Dow fell here and then launched higher as the price moved higher. And the prices moved higher across the board. Now, eventually, this can't continue. This will get to some peak level. I don't know where that is. as the markets move higher. And then they'll need to take a breather because this can't go on forever. Well, what about ARK Innovation? Well, you saw the price action earlier when we discussed that, and you can see it here. It is just hockey sticked higher, and the buying pressure is moving nicely higher. The selling pressure has fallen to 0. Let's take a look at sector rankings. These tend to be a little bit laggy, but boy, not in these last few weeks. You can see consumer discretionary has moved up. Consumer staples have moved down. Cash has moved down. But let's jump right into sector rank acceleration because these move more quickly. So what is there to like? A lot. There's a lot of green on here. These brown lines are because the Dow moving up can be both good and bad. They're equities, but they're safer equities. Consumer staples are equities, but they're safer equities. So I kind of view it as a mix of good and bad, and therefore I mix green and red, and we get brown. So what looks bad? Not much. Really, 2 bars here. One for emerging companies in the NASDAQ 100, which got pushed lower, I'm guessing because investors were putting their money more in the general small cap index and in large cap tech, and then emerging markets got pushed down 1 notch. And I don't think that's necessarily bad. I think it happened because a lot of other things pushed higher and pushed them down. So this is a very, very good looking picture compared to where we were last week. And what about treasuries? Well, if we take a look at treasuries, they plummeted the day of the election. You can see that here, November 5th, and then came crawling back. Now, why is this? Well, I think investors were dumping treasuries to put their money in equities, but you can see that they've come crawling back here. So this is looking very good. What if we look back over the past month? Well, yeah, you can see what happened. They sold off going right into the election and now are starting to head higher. And if we look at the past year, we still have a healthy appetite for treasury risk. The longest duration treasuries, this purple line, EDV, are on the top, followed by TLT, and then going to shorter durations. This is very, very healthy. And if you've heard me in my past videos, I've said as this has plummeted, this is going to turn out to be quite a bargain. This is way overdone. So let's take a look at the buying and selling pressure for treasuries. Now, this was a couple of weeks ago. You can see, again, we had divergences just like we did in equities. Falling price, but falling selling pressure. Falling price, falling selling pressure, buying pressure rising slightly. This can't continue, which is why I kept saying EDV is going to end up being a real bargain here. And if we go to last week, so that was 2 weeks ago, this is last week, you can see that divergence continued. And I went, oh my God, this has really been going on for a very long time, and it has to end. Well, where are we now? Well, I think we may have seen the end. Now, there's not a big price movement upward in any of these, but you can see that they appear to have turned the corner and look like they could be moving higher. And you can see, if you look at the selling pressure, it really collapsed here over the last couple of days in all cases. And the buying pressure is moving higher, as you can see here and here a little bit. So it'll be interesting to watch these next week if I do my video next week. If not, we'll visit this in 2 weeks. And what about the yield curve? Well, we're still, we're uninverted. Slightly, 12, almost 13 basis points, as you can see here. But you can see that since the Fed lowered rates this past week, you can see what's happened at the short end here. The rates fell a bit here at the short end, and they're also falling a bit at the longer end, which is good. So as the Fed lowers rates, these will drop dramatically. These will drop more slowly, but they will drop. And if we take a look at what the markets think is going to happen 5 weeks, 4 days, 5 hours, and 37 minutes from now, you can see there's almost a 66% chance the Fed will lower rates by 0.25% again. And then if we go out to January, that looks like, it's interesting that it's still more likely that the Fed will, at that point, keep rates lowered by 0.25%. But there's more of a likelihood here starting to creep up that they could lower rates by 0.5%. I think they'll be at 0.5% when we get here. I don't know what's driving this graph. And then you get out to March, And you can see again, there's still a strong possibility of only a 1/4% reduction. I don't know what's driving this. I would expect the Fed to be lower by at least this much by March, which would be 1/4, half, 0.75%. And what about gold? Well, as I mentioned earlier, gold peaked out here, and then right after the election, it started to plummet. So I think investors aren't as worried about risk. They're taking gold off. And what about Bitcoin? Well, Bitcoin is really starting to take off. And you know why. The Republicans aren't as big on regulations, and Bitcoin has been hindered by the SEC dragging its feet, figuring out how to deal with Bitcoin. You can see what's happening here. The buying pressure going through the roof, starting to head very high, and the price moving higher. This looks great for Bitcoin. Look, it's clear from the data I just presented that you need to resist the fear-driven urge to do something with your portfolio allocations. Spoiler alert, this usually means selling to raise cash. As I said last week, the fear of the unknown presidential election results in most cases is much worse than the reality 2 months after they occur. As you can see from the price movements and metrics for equities and treasuries, the equity markets and treasuries are making a nice comeback and look poised to move higher. This is why I caution you to be an investor rather than a trader who tries to time the markets. Investments and investing aren't that complicated if you know how to allocate your portfolio without destroying your returns and getting little to no protection from downside risks. As an investor, you need to take the long view and allocate according to your risk tolerance rather than fretting about what's currently happening in the world or what everybody else is doing that you read about in the media with their portfolios. If you want to be a better investor, I discuss how to allocate your portfolios in 2 key videos linked in the pinned comments below, titled The Ideal Portfolio Using Just 2 ETFs or Mutual Funds, and The Ideal Portfolio Using Individual Equities. Again, link in the pinned comments. Until next time, I'm Calvin Rose, and thank you for watching Invest Smarter. That's all for now.
Stay up all night, gotta work now. Make up my mind and it turns around. Say that I'm fine till I burn out. Thinking this money sounded so nice. Ambush here in the strobe lights. Pay anything for the high price. This life feels like the sunny water.